Welcome back to the channel. Today we are going to talk about one of the simplest yet most powerful tools in all of technical analysis, trend lines. Trend lines are used by everyone from beginner investors to professional fund managers, and once you learn how to draw them correctly, you will never look at a stock chart the same way again. By the end of this video, you will know exactly what trend lines are, how to draw them properly, and how to use them to make better trading and investing decisions. Let us get started. Section 1. What is a trend line? A trend line is simply a straight line drawn on a chart that connects a series of price points and extends into the future to act as a guide for where the price may go next. The whole purpose of a trend line is to visually represent the direction of a trend, whether the market is moving up, down, or sideways. There are two types of trend lines. An uptrend line is drawn by connecting a series of higher lows, the low points that keep getting higher and higher as the price moves up. This line acts as a dynamic support level in an uptrend. A downtrend line is drawn by connecting a series of lower highs, the high points that keep getting lower and lower as the price moves down. This line acts as a dynamic resistance level in a downtrend. Section 2. How to draw a trend line correctly. Drawing a trend line correctly is more art than science, but there are some important rules to follow. First, you need at least 2 points to draw a trend line, but 3 or more points makes it much more valid and reliable. The more times a price has touched and respected a trend line, the stronger and more significant that trend line is considered to be. Second, in an uptrend, always connect the lows, not the highs. You are drawing a line under the price action showing where buyers have consistently stepped in. In a downtrend, always connect the highs, not the lows. You are drawing a line above the price action showing where sellers have consistently stepped in. Third, the angle of the trend line matters. A very steep trend line, one that rises or falls at a very sharp angle, is usually not sustainable and tends to break quickly. A gradual moderate angle trend line tends to be more reliable and longer lasting. Section 3. Trend line breakouts. One of the most important signals generated by trend lines is a breakout. When the price breaks through the trend line, when a stock that has been in a downtrend breaks above its downtrend line with strong volume, it is a bullish signal. It suggests the downtrend may be ending and an uptrend could be beginning. When a stock that has been in an uptrend breaks below its uptrend line with strong volume, it is a bearish signal. It suggests the uptrend may be ending and a downtrend could be beginning. Just like with support and resistance breakouts, always confirm a trend line breakout with volume. A breakout on high volume is much more reliable than one on low volume. And remember the concept of role reversal. Once a broken uptrend line is violated, it often becomes a resistance level. Once a broken downtrend line is violated, it often becomes a support level. Section 4. Trend lines and channels. When you draw both an uptrend line along the lows and a parallel line along the highs of an uptrend, you create what is called a price channel. A price channel is like a road within which the price travels, bouncing between the lower trend line support and the upper channel resistance. Trading within a channel is straightforward. Buy near the lower trend line support and consider taking profits near the upper channel resistance. When the price breaks out of the channel in either direction, it often signals a significant move, either an acceleration of the existing trend or a reversal. Outro. To summarize, trend lines are straight lines drawn on a chart to represent the direction of a trend. Uptrend lines connect higher lows and act as dynamic support. Downtrend lines connect lower highs and act as dynamic resistance. The more times a price touches and respects a trend line, the more significant it becomes. Breakouts from trend lines, especially on high volume, are powerful trading signals, and combining two trend lines creates a price channel that gives you clear buy and sell zones. Trend lines are one of those tools that are simple to understand but take practice to master. So, open a chart today and start drawing. If you found this video helpful, please like and subscribe for more content on stock markets and economics. Thank you for watching, and I will see you in the next one.